You were told that whenever the moving average crosses each other to the downside, you make a sell. And whenever the moving average crosses each other to the upside, you make a buy, right? And at the same time, you were told that whenever the average side, which is the indicator window, is at the 70 or 90 region, is an overbought, and when it is around 30 to 10, it's an oversold region. I want to say you are right, and at the same time you are wrong. All of this scenario are right if only you are in the right market condition, and you are wrong if you are only in the wrong market condition or in the wrong zone, as the case may be. You don't trade indicators in isolation. They are meant to be traded around the zone with certain conditions. So there is an add-on to every indicator on your chart, and you are meant to trade with it as a confirmation to what you are doing, that is, as an add-on, in order to have a successful trade. I'm Soji, and you are welcome to Soji Forex. We share ideas on how we can take advantage of the market, find our entries and exits in order to become a profitable trader. So our goal is to turn your trading around in a positive way. I want to see you succeed, want to see you become profitable. If you are coming across our channel for the first time, please do not forget to leave a comment in the comment section below, like the video, share, and above all, subscribe to the channel so you don't get to miss important content whenever we publish our video. In today's video, I'll be sharing with you tips on how to trade using the indicator. So in our main chart, we have our Bollinger Band, and then the black moving average is our exponential moving average 10, and then the blue one is our EMA 50, and then of course we have the upper Bollinger Band, the lower Bollinger Band, and here we have our RSI 14. So let's dive into what we have for today. Now, we don't trade just because you have a cross of the moving average. Is not enough for you to confirm an entry signal, either for a buy or for a sell. Now, what are we saying in essence? You will need other confirmation to your indicator. For instance, you need to know the direction of the market. Why? Because we can have so many cross. This is one, this is two. So in this, do you trade? Here the price just cross, and when it goes to the upside, you buy. And remember, before you will see this particular tip, before this cross happen, if you are in a live market condition, you realize that price is somewhere around this zone, this particular zone here, before this cross will happen. And then immediately you entered your buy, trade here, you realize that the market moved to the downside again and cross each other and begin to go down. So you just lost this trade. And when it crosses down to this side, again, now you want to buy, because all you know is when the indicator cross, you buy. And then another cross happened here, and you are eager to buy at this zone. And just imagine, and before this cross happened, the price is somewhere around up here, and then you bought, and immediately you bought, the next thing is the price cross again to the downside. So you continue on and on, making it look as if the indicators are not working. The question is not if the indicators are working, but the question is you are using the indicator in a wrong way. So I want to share with you briefly how you can use this indicator in a right way. One of the way you can do this is by using your trend line as an add-on. For each, this is my trend line. Remember, I need 2 points for me to be able to connect my trend line. So in a downtrend, I will need a higher low and another higher low, so I can be able to connect my downtrend. And so now I have the first one and I have the second one here. So how do I take advantage of this to trade? Using my indicator. This is what I will do. First, price went to my indicator here, gives me a low. So when price was coming down from my indicator, the first thing I would do is my reference line and place it directly on the body. This will be working hand in hand with the price, so I will place it this way. I will leave it there. Then I have this other one that is just lying. Then we don't have this formation yet. Then price was coming down from that zone. The indicators crosses each other, which of course is a signal for me, telling me, okay, probably this is a downtrend or a signal for a sell. But the question is, will I just jump into the sell? The answer is no. I will need this price to pull back to my indicators. That is number one. And secondly, I will need the price to pull back to my area of resistance, because it is now a confirmed downtrend. So I will need it to pull back to my area of resistance, which is what I am having here. And this my area of resistance is my trend line, because your trend line is your support and resistance. It's a dynamic support and resistance. So price pull back there. So regardless of this cross that is happening here, in as much as price has not break this resistance, I won't be making a buy entry. Then another is, remember also that this level is a level of resistance. You are to mark out your area of support and resistance too. So this level is as well my level of resistance because price was rejected, and then price break this my trend line. So when price is going back inside my indicator, I will pick up a trend line and mark it out this way. So having established this, price pull back into my indicator. Remember, this is a cross again, giving me a buy signal, right? But this buy signal was accomplished with also a pin bar, but I won't buy here for two reasons. Why? This is my pin bar. I need another follow-up candle, that is a bullish candle, in order for me to buy to the upside, and here there is no follow-up candle. Then secondly, even if there's a follow-up candle, it is close to an area of a resistance. So I will not be buying when price is close to a resistance, despite my signal from the moving average telling me that a cross has happened and I should buy. I will not buy. One, I have the right candlestick pattern, but I don't have a follow-up candle. Two, I will not be buying in a zone that is close to a resistance. If that is the case, then what do I do? This thing gave me an inverted hammer. So I will follow this. This is an inverted hammer. And then this is a follow-up candle of this inverted hammer. So I will rather sell here to the downside. Or better still, I will be patient enough to wait for this scenario. Price went here now and then reject from this my trend line. So with this rejection candle and with this hanging man, I have a confirmation of a sell. So I will be taking a sell, because let's assume when this level happened and this level happened, I just connected my trend line. So I don't have entries here. This is my entry now because price returned back and now it pushed back here, gave me a candlestick pattern. So I will confidently sell from here to this level. Beautiful, right? Then let's proceed with our next confirmation. Now after this, we have sold here, which is okay. And we have our trend line connected to this zone. So here again, price pull back to this zone, giving us another area for us to find an entry here. But look at what happened. We have a bullish move to the upside with this particular moving average cross, which give us entry for a buy. But despite this cross for us to buy, because we have a resistance here, we cannot buy. Despite this big candle, there is no follow-up candle. So you do what? You now wait for a pullback. And here now, look at what happened. Price pulls back to where? Pull back to our moving average. And our moving average, we want to see an indicator giving us a candlestick pattern in the moving average. So we will always wait for price to pull back, because when this cross happen, price has already gone far. So once you jump in, price will begin to reverse. So you always wait for a pullback to your moving average. You also now wait for a candlestick formation. When the pullback is happening, you put your trend line. And we have a hammer, and this hammer gave us another confirmation entry for a buy. And so we'll take this buy to the upside. Then here we have another scenario. If we are to connect this our trend line, it will still be up to this point. So look at what happened. Here now we have a cross of this moving average. And when this cross happen, this indicator that this long candlesticks is what make this cross to occur. So do we just jump in and then sell here at the close of this candle? That is when this, imagine you now sold here, price will now begin to pull back to the upside. So you will not want to be doing that. The thing is, you put your trend line from up there and look at what happened. After this cross, wait for a pullback into the moving average. And also you have a trend line which is your resistance, serving as a double confirmation. Then you find your candlestick pattern within the trend line and the moving average zone at any of these points. And having done that, you can as well back it up with your trend line. Okay, that is it. And it's as simple as this. So when you have this follow-up candle closed now, you can make your sell entry as an aggressive trader. And if you are a conservative trader, you might even want to wait to see that this price break this trend line here. Then you make your entry at the close of that candle. So this is how to go about trading using indicator. Mark out your area of support, your area of resistance, then you combine it up. Okay, so there is nothing like overbought and oversold. Now I want to let us talk a little about this oversold region. Here now price is at this downside. So price being here, even up to 10 level is an oversold, right? But look at it on our the same place where we are having price as our over. Now you see this same overbought zone, still buying, still selling. You can see that despite this, the price is still going down. So why is this price still going down this way? Because seeing this zone alone, price being here alone, is not enough to cause a reversal. In short, there is nothing like overbought and oversold until you see a reversal signal. Either the trend line crosses each other, or a break of structure happen, or the trend line is being broken. So it is better if you were having a trend line this way. If you were having a trend line connecting these your points all the way to this downside, you won't be bothered trading these indicators alone in isolation, claiming that okay, price in an overbought zone, now let me buy. No, you can see that price keep going down even far beyond that. But rather, you see our moving average price is still below the moving average 50, is still below the middle Bollinger Band. So we are fully in a downtrend. This is not enough to reverse price. Remember, it is this price that controls the indicator. It is not the indicators that control the price. So what you are looking out for first is what is the action of the price relative to the indicator, not what is the action of the indicator relative to a price. Right? So this is how to go about it in a right way. And I believe you have gained something new from this video. Please do not forget to like, share, and subscribe to our channel.